Stocks trade in the green after a down day on Thursday, with Adani Group stocks finding their feet. Realty and IT are the outperformers, while auto and consumer durables are the laggards.
Mahanagar Gas increases the price of CNG by 2 rupees per kg following the recent cut in domestic gas allocation to the company. The stock gains even as the hike is far lower than required to offset the impact.
NTPC Green Energy's 10,000 crore rupee IPO gets fully subscribed early on the final day of the offer, with retail portion seeing strong oversubscription.
Bitcoin tops 98,000. It's within striking distance of the $100,000 mark following reports saying the Trump's Crypto Advisory Committee could recommend creating a US crypto reserve.
Good afternoon. You're watching Halftime Report here on CNBC-TV18 on what is the final trading day of the week. I'm Hormas Fatakia. With me is Mangalam Malu. Some recovery on the indices, looking to end the week on a high are the benchmark indices. And of course, it is the Adani Group stocks that are the talk of the afternoon.
Absolutely. They were the talk on the downside yesterday, and they are on the talk, they are the talk on the upside today. What's interesting, though, is after this up move of nearly 230 points that we've seen on the Nifty, we're very close to the 200-day moving average. So crossing and staying above that consistently is something that we will keep an eye out on. These are some of the Adani Group stocks which have recovered from lows, but a couple of them which are doing extremely well. Case in point, something like Ambuja Cement and ACC, both of them up around 4.5% as well. But the stock of this afternoon definitely has to be Praj Industries. Ever since the management joined us this morning and spoke about, the company's growth plans going forward, where it expects to triple its revenues by 2030. The street has taken note of that, and the stock has seen a big surge itself. Vamakshi joins into the details of the company's plans going forward all the way up until 2030. Remember, just a couple of days ago, we had Indian hotels give their 2030 plan, and that stock too moved to a record high. Vamakshi.
Well, absolutely, Mangalam. Praj Industries is soaring in trade on the back of the commentary that came through from the management in its press release. The company said that it is eyeing opportunities in sectors which include sustainable aviation fuel, biopolymers, as well as energy transition and climate actions. Overall, they highlight they're expecting the energy majors to invest 25 lakh crores in the clean energy sector by 2030, while traditional oil and gas market is also expected to invest an additional 21 lakh crores by 2030. What does this mean for Praj? Well, they see significant demand for modularization solutions for setting up plants, and in order to cater to this demand, they're setting up a dedicated advanced manufacturing facility in Mangalore, Karnataka. They're investing somewhere around 400 crores. And from this facility itself, they expect to generate revenue ranging between 2 to 2,500 crores per annum at the optimum level. Apart from that, India also has set the target of blending 1% by 2027 and 2% by 2028. This is for sustainable aviation fuel. EU and USA, respectively, have kept the SAF blending target of 6% and 10% respectively. And therefore, this is again a new opportunity, a new door that has opened up for Praj. Now, given this development, they're expecting very strong growth going ahead. Right now, their revenues are somewhere around 3,400 crores. They expect to triple this to 10,000 crores. Significant jump up out there is what they're expecting over the next couple of years. And also the share of exports is expected to rise from 29% now to 50% by 2030. So again, in terms of margins, this does bode well for the company. So overall, it's a very strong commentary coming in from the company, and resultantly the stock is surging higher.
Aiming for the skies is Praj Industries is showing up on the stock price as well. Vamakshi, thanks a lot for that. Now, the other stock in focus is Soba. Remember, real estate was an outperformer yesterday. It's an outperformer today as well. Now, that Soba is in focus on the back of fresh brokerage commentary that is coming from HSBC, and Sonal is here with more details on that.
Thank you for that. Well, HSBC is sounding bullish on the stock. They have rolled over their target price as well. They say that after many years, the company has gone ahead. They've now disclosed a lot more details about their land bank, and that is what makes them very positive, because it will give them more comfort. The company has another 26 million square feet, which is ready for launch right now, other than the 19 million square feet, which is in the pipeline. In terms of land bank as well, they have around 1,878 acres, which can be converted into different projects. This has improved the visibility on launches going into FY26, and the company is aggressively looking at entering newer markets, be it Mumbai, be it Noida as well. But But what they don't like is that the margin pressure continues. That is something that happened in Q2, and the management expects it to continue for 2 more quarters, and that is something the HSBC is not comfortable with. They think that Sobha has successfully resolved their debt-related issues. They have been continuously seeing improvement in their operating cash flows as well, and that's what makes them positive. They retain a buy. They tweak the target price to 2,150 from 2,000. This is on the back of a roll forward and tweaking valuation of the land bank. So that's something we should keep on our radar. That is just not on the back of improvement in fundamentals, but a rolling forward that's happening here. But yes, the street is taking note of that. The stock is up by 7%.
Absolutely, we take that point. You know, you were talking about Praj aiming for the skies. Sobha seems like aiming for the skies as well through its skyscrapers. But a bunch of real estate stocks actually doing well. So, you know, Sobha is getting that additional push from the HSBC note. But pull up something like, you know, Godrej Properties, DLF, or even some of the local players. We have, you know, a big move coming in on names like Ajmera Realty, etc. All these stocks doing well, and a couple of these high beta names doing extremely well in today's trading session as well. Case in point, something like a Paytm, which is up 5%. We're seeing some traction on Kansai Nerolac as well. Remember, the paints sector was down in the dumps in the second quarter post the results. Kansai Nerolac actually stood out because of its exposure to the industrial paint side, and that's moved higher. Alongside that, we're seeing some recovery in names like V-Mart Retail and Raymond too, for instance. Raymond is up around 7.5%. So a bunch of broader market stocks doing extremely well, even though at an index level, the mid-cap index is just up around 2/3%, which is half the gains that we're seeing on the frontline index. The broader markets are actually seeing a bit of an up move. What we'll do is take a short break, come back on the other side, feel a little hungry, right? So get a snack in with John Shitze, who's the CEO of Subway Global, joins in to discuss the company's outlook going ahead, and more importantly, the trends in the QSR space. Well, the market seems to have, caught another wind once again, close to 300 points for the Nifty right now, crossed the 200-day moving average, and as a result of which the last few points saw a vertical swift up move. What is it that is leading the Nifty higher? We have the Nifty Bank, which is doing well. The Nifty IT index comes up for you. That too is supporting the frontline index, which is currently around the higher end of today's trading range so far. But the last couple of points have been led by Reliance. So the intraday chart of Reliance should come up for you. That heavyweight is supporting the cause of the Nifty. Alongside that, we have an up move coming in on L&T as well, which is a fair weight on the index. So Reliance, there were a couple of brokerage notes in the morning citing positivity on that stock. Reliance and L&T, both of them taking the Nifty higher, comfortably above that 23,600 mark, comfortably above the 200-day moving average as well. So we'll keep an eye out on how this pans out. The mark that we need to keep an eye out on the Nifty is 23,781, which was the high that we saw on Tuesday before we went for a break on the election break on Wednesday, and the level from where we saw a bit of a decline in the last hour on Tuesday as well. So 23,781 is one of the marks that we will keep an eye out on. But speaking about keeping an eye out on things, it is afternoon time, it's a Friday. Important to get in a comment coming in on the QSR space from Subway Global. Remember, Subway has opened its 850th store in India. The management says it aims to more than double its new restaurant openings in 2024 itself. John Shitze, who is the CEO of Subway Global, joins in now. Let's get the basic hygiene numbers out of the way. What is it that Subway does in India with its 850 restaurants in terms of revenue? How are they comparable with the peers in the industry?
India is one of our top probably 2 or 3 growth markets that Subway has in the world. We're in about 100 countries today. But when I look at the growth rate that we're experiencing now and really what the potential is, it's really quite amazing. I think we'll absolutely be able to double our restaurant count in the next 5 to 6 years. I don't have to tell you, you've got a very young population that continues to get wealthier, population that as they move up the economic chain become more focused on health and freshness. And so I think Subway really fits in quite nicely with the growth story of India, if you will. As you know, we just signed a new master franchisee, which is not how Subway had traditionally gone to market with the Everstone Group. And so, we're very excited to see how much growth they've already injected into this market. And as the brand, expands its footprint, obviously its revenues continue to rise and its same-store sales continue to rise. Just couldn't be more excited about what the opportunity is.
But John, when you look at the consumer preference of India, when you look at these experiences that Indians are seeking, how are they different from the world, and what are the underlying trends for the QSR restaurants in India?
I think there are a few differences here. As you know, obviously the taste profile in India is different than it is in a lot of other countries. You guys like spicy foods in lots of the country, and you like lots of hot products. And so, what I think about what's great about global QSR chains, when you think about the McDonald's and the Burger Kings and the Subways of the world is, yes, you can find the core menu the same in a lot of parts of the world. But then we all allow people to customize. So, generally speaking, about a third to 40% of a menu will be different depending on where you are in the world. And I think in India, we've done a great job of customizing our menu to appeal to local taste. Obviously, given the size of your population that likes vegetarian options, Subway plays very nicely into that as well. So, I think given the custom, and we customize, as you can build our products literally how you want it. You can obviously also get a chef curated sandwich where, we've already decided what you might like on that, but you can do it either way. So again, I think between customization, the fact that we're heavy on vegetables and freshness plays incredibly well. And again, it's a customized menu, I think, that really ideally fits the taste profile that you find in India.
Right, but when we speak about the quick service restaurants itself, John, there is an underlying macro trend among people who do not eat out of places which they believe are chains. They're looking for more boutique experiences, for a healthy experience, less processed foods. How are you targeting that crowd? And do you think this trend may, topple the apple cart here?
Well, again, I think Subway is ideally suited for that world, and India certainly fits in, with other parts of the world, as I said, as you continue to get wealthier and move up the economic food chain, so to speak. People are more concerned about freshness and health. And if you think about the fact that we bake bread daily in a restaurant multiple times a day, you think the fact that we chop our vegetables that are fresh every single day, you can obviously get hot, well-cooked, really craveable products within Subway. So I think Subway's DNA really is ideal or plays nicely into where the Indian consumer is going, or actually where they are today and what they're really looking for. So that freshness has been part of our DNA for decades.
Now, there's so much competition in this space, right? John, what do you say about that? And when you speak about market share, you have competition from foreign QSRs as well as the local ones. Now, what would be the right to win in the Indian market?
No, it's a great point. You have lots of local brands here that do a phenomenal job. As you noted, there are, our normal global competitors that we see, in the other 50 to 100 countries where we all compete. And again, I think given the size of the Indian population, how young it is, how it's becoming more affluent, again, I think there's tremendous growth opportunity, not just for, Western QSR concepts, but just for restaurants in general, because as you noted, the out-of-home eating percentage continues to increase. And I think that will continue to do so as you have more women enter the workforce, as people are time-starved, the advantages that QSR brings in terms of speed, availability, meaning, they're ubiquitous, they're easy to find. And then again, our customization and freshness. I just think this is a market that, as I said, I think we're going to double it in the next 5 to 7 years. But when I look, 10, 20 years down the road, I could imagine us being 4 or 5 times the size we are. And still, I think there's lots of growth for the locals and other global players out there. So I really think this is a wonderful market for the restaurant industry.
Right, 4 to 5 times your current size in the next 10 to 20 years. That's a headline that you've given us. But what's interesting is that post-COVID, a lot of restaurants, quick service restaurants, have increased their revenue share from deliveries. For Subway, how is this dine-in versus delivery proposition? How do you see this changing going forward?
Yeah, I would say I don't think Subway's really any different than some of our other global competitors, meaning, third-party delivery continues to increase. And as you noted, part of that is, due to COVID. I think people got used to it and they found it to be convenient. And I think the key thing in today's world is you have to go where the consumer wants you to go. And I think that's just one of many options as digital apps, and our digital app, continues to improve, and loyalty programs and things like that. So whether it's people that are, again, ordering on that app and just coming in and picking up the food and take it out, or whether it's third party, or whether people want to come and dine in, again, I think you have to have all options available, and you have to meet the guests where they want to be for you to, ultimately be successful in the long run in any market. India, obviously, we're talking about here, but I think that would be true around the globe.
John, for running a business like Subway in India, what are the unique challenges that you face?
Well, as you know, when you have a country as vast as India, really, I think you even have micro taste within a country. So I think for us to be successful, what works in the north of the country might not be the same in the south from a menu innovation standpoint. Maybe perhaps, how the food is delivered or where you're going to meet the consumer through those different avenues we discussed. So I think the key is remaining nimble and flexible and not thinking that one size fits all in India, and really working to make sure you're maximizing those regional differences within the country is what's going to allow you to maximize your growth opportunities.
I guess we can't let you go without this most important question. You have signed a master franchise agreement with the Everstone Group, which also runs the Restaurant Brands Asia stock, which runs Burger King in India. Are we looking at Subway India listing anytime soon? Could there be a merger? Can we see the public play this growth story via the stock markets?
That you'd have to talk to Everstone about that. I think it's ultimately up to them. I know they view this as a very long-term investment. They, like Subway, corporate, view India as a massive opportunity over the coming decades. And, whether they want to keep that in their portfolio longer term, whether they want to monetize it, 10 years from now, 15 years from now, I don't know. I know they're as excited about the opportunity as we are. And I think a lot of the learnings that they get from Burger King, it can help us as we grow, and vice versa. So I actually like signing up master franchisees that run multiple brands, because I think they have generally speaking, a much better feel for the consumer, the marketplace, et cetera, just given that, they're representing different brands and different taste profiles.
All right, John, thank you so much for joining in and sharing with us your thoughts on the road ahead for Subway India, and of course, answering our question on a potential listing as well. Time for a short break here on Halftime Report. Up next, as the market is heading towards the highest point of the day, good time to get in a chart check. Sudeep Shah of SBI Securities joins us with that.
Well, it's a big up move that we're seeing on the market right now. Nearly 300 points for the Nifty, almost 900 points for the Sensex, doing well for the Nifty Bank as well. So if you just take a look at the key contributors on the way up today, we have the Nifty Bank and the Nifty IT Index. So both guns firing, unlike our top batters in Australia. Right now, we have the top order doing extremely well for the market. The Adani Group, after a big drubbing yesterday, has recovered in today's trading session. All of them sitting with gains of anywhere between 4 to 5% Names like ACC Ambuja doing extremely well too. The mid-cap index, now if you look at just the index, you would see it up just around 0.7% as against the frontline indices, which are up 1.2, 1.3%. But if you look at the broader markets, you have nearly 3 stocks advancing for 1 stock which is losing, which tells you that there is inherent strength in the market. With this up move that we're seeing right now, the 23,500 put writers are fairly active. They're telling you that, maybe at lower levels, we will see a solid support for the market coming in at around 23,350 to 23,400 odd levels. But most important to see the 23,500 call. That still has a high premium of 300 rupees, telling you levels around 23,700, 23,800, which is coinciding with the Tuesday's high of 23,781, could be a bit of a resistance. The only imponderable between this move and what we see next Monday would be the Maharashtra election outcome. The Nifty is above the 200-day moving average, so holding and closing above that would be extremely crucial, because we failed to do so on Tuesday's trading session as well. A lot of stocks in focus. MGL is seeing a fair amount of long positions being built up. ABFRL is one of them, which may actually exit FNO ban with the kind of option open interest unwinding that we're seeing. It's closer to 80% right now. If it falls below that 80% mark, then we may see the stock exit the FNO ban.
It's very strong up move on the index, but the question is that sustainable as we move into the final few hours of the trading session? Let's ask that question to Sudeep Shah of SBI Securities, who is joining us now. Sudeep, good afternoon. Thank you for joining in. You know, we have a 300-point up move on the Nifty. On a normal day, we would be very happy about it. But now we are only skeptical about whether this move would last. What's your call on the index? Do you use this up move to reduce your long positions, or do you build on to this?
Good afternoon, Hormaz. I feel this looking at today's move and the kind of sustainability that we have seen, at least in the past 2.5 hours, I feel it is that day that we need to build up on the long positions. And after this big fall that we have seen in the last couple of weeks now, this is the first sign of a credible reversal that we are seeing. And it has rebounded from an important support zone, which was closer to 23,350, 23,400 zone. So for me, there are two things that has stood out today. One is a rebound in Reliance, and the second thing is Bank Nifty crossing 50,800, which is the 10-day exponential moving average. So if I put both together, then I feel yes, today we could head into a strong closing, and now 23,450, 23,500 zone would act as a strong support on the downside, and the first level that we should be watching out on the upside would be 23,750 to 23,780. That is precisely the high of Tuesday. And one more important point would be that it is the 10-day exponential moving average. So for me, 23,450 now would be the all the more the key support zone, and we could head up to 23,750, 770 zone. And once that crosses, 23,900 also could be in sight.
Oh, wow. 23,900 is what you're looking at right now. Individual stocks, how are you playing them? I presume you're playing them via long positions.
Yeah, Mangalam. See, the first stock that I like in this rebound is from the IT space. Now, IT, we all know that has performed well and it's continuing to perform well. The first pick would be HCL Tech. The stock was consolidating in the last few sessions, and today we are seeing signs of a breakout. And from the current levels, 1840 could hold as a stop loss, and on the upside, 1910 to 1930 levels are what we are eyeing on the upside as a target. The second stock is from the cement pack. Now, Ultratech Cement is that stock. The kind of pullback that the stock has seen in the last 2 days gives us confidence that it has rebounded from an important support zone on the weekly charts. And once again, the stock is now heading on the upside closer to 11,700, 11,800. And this could be bought with a stop loss of 11,000 on the downside.
All right, Sudeep, thanks a lot for joining in, getting us your views on the index and on specific stocks as well. Time for a short break. Up next, we get you exclusive excerpts from our conversation with the CEO and co-founder of Zepto as the company raises $350 million domestically in the largest ever for an Indian startup. Stay tuned. Welcome back. On to an exclusive now. Zepto has raised $350 million in what is the largest 100% domestic fundraise for a private startup in Indian history. Now, the quick commerce delivery platform's co-founder Adit Palicha spoke to Shireen Bhan about the rationale behind the company's fundraising and why quick commerce should be celebrated. Listen in.
When we spoke in August, you said you're not looking at raising any more money. What's changed?
So we raised over $300 million. It's the largest 100% Indian fundraise for a private startup in the history of this country, right? And we're proud of it. The reason why, when we started this financing, we had over $1 billion of net cash in bank, no debt, right? We're growing well. And the reason why we raised this capital, candidly, is because, throughout the entire life cycle of Zepto, we've always wanted to bring on board domestic capital. Both, Keval and I are excited about the fact that we can build like an Indian company that people can be proud of, but there never really has been risk capital of that scale available to private startups. And so, we pushed, I remember from the Series A onwards, Series B, Series C, Series D, we tried to get domestic investors on board, but it wasn't the right time. We saw an opportunity here with Motilal Oswal and their team. And, we went into it not really with many high expectations, but we were able to put it off, and we're quite excited about it. And the rationale behind, doing a domestic fundraise is fairly simple. We had over $1 billion of cash in bank. Now we've got over $1.3 billion of cash in bank.
Yeah.
But this domestic financing just helps us increase Indian ownership going into an IPO. We think that benefits the company long term. One, just public trust and shareholder trust going into a public company. It's better to be owned by high quality Indian names, right? And historically we've been limited to Silicon Valley VCs that are not very familiar, or that Indian institutional investors and Indian retail shareholders as well are not familiar with. And B, even just from a regulatory and government lens, we think being an Indian company is favorable. And lastly, it's the ambition that Keval and I have always had to build like an exciting Indian company.
I bet you were looking at the Swiggy IPO very, very closely. What was going on in your head as you saw the listing, which got off to a slow start and then sort of shot through the roof on day one?
Yeah, I think it's great. Like, I mean, it's huge kudos to what Harsha and the team have pulled off, and I think it's great for the ecosystem. I mean, I think we should, one of the last things I mentioned, Shireen, is that we should be celebrating this. This is Indian technology, like quick commerce, and Swiggy's IPO. I think it's fair to say, largely powered by excitement about quick commerce, right? Zomato's performance, largely powered by excitement in quick commerce. I think that's not a controversial thing to say. It's a consensus view. We should be celebrating quick commerce. This is good for the country. This is Indian technology, Indian innovation. This hasn't worked anywhere else in the world, and it's real infrastructure for ordinary people. Like, this is not for like the top 0.1% of India, right? These are people who now realize the scale they were getting to. This is impacting ordinary people's lives at scale, and now going from metro cities to beyond. But the way that I look at it is we should be celebrating the fact that today, because of Indian infrastructure, Indian technology, there's a mom in Noida who's able to take a part-time job because her life has become easier because of quick commerce. It's exactly like setting up a metro station, right? So, we look at this as Indian technology, Indian innovation. Nobody else in the world has been able to do that.
Have you been able to convince the government, though?
Well, I think I think the government is progressive. They support, value creation and job creation at scale, right? And they've been supportive so far. And like, we are, honestly in a position where we think of them as a partner. We're always open to feedback. And I mentioned this last time as well to you, right? That even with, let's say, gig workers, right? We are, honest to God, good faith, open to feedback and dialogue on how we can improve. Whether it's with gig workers, can we do more? Today we give insurance, right? 1 lakh cover plus 10 lakhs of term insurance for free. Whether it's with, food compliance across the board. So I think they've been helpful. But, the last thing I'll say is, next time, we're talking to, foreigners, next time there's a foreign, leader in this country, we should say, hey, not only do we have UPI, Indian innovation there, but in India, you can tap a button and your daily essentials will come to you in 10 minutes. That's amazing.
So you're saying quick commerce is like the UPI moment for India?
No, it's world-class infrastructure built in India with Indian technology. And it's making real people, ordinary people, their lives easier every day, and it's improving productivity and the quality of life for tens of millions of people. By Indians. It's not some rip-off of, some American model or some, Chinese model. It is like only in India you get this stuff, which is awesome.
Made in India,
right,
and made for India for now.
Absolutely. No, I mean, we are going to be in India for these next couple of decades. So.
Interesting conversation there, and you remember you can catch excerpts of this exclusive interview all through the day today only on CNBC-TV18. With that, we'll slip into a short break, come back, get you more on the markets and a lot of stock-specific action. Stay with us. Well, the Nifty has done very well to cross past that 300 points in terms of gains and fairly comfortably around that 23,700 mark as well, just about 25 points away from those levels. And among the top contributors on the way up today has to be Reliance Industries, up around 1.5% right now, in focus on the back of a bunch of positive notes coming in from brokerages like JP Morgan and Morgan Stanley. Sudarshan joins in with the details of what those notes contain. Sudarshan.
We have two positive brokerage notes on Reliance Industries. Notes are from JP Morgan and Morgan Stanley. Both the brokerage houses have overweight call in the stock, and JP Morgan has a target price of ₹1468 and Morgan Stanley has a target price of ₹1662 per share, implying an upside up to 34% from current levels. So what does JP Morgan say? It says one of the two drivers of the recent underperformance is weak refining margin, and JP Morgan says that has now started reversing, which is positive. Second, poor retail top-line growth is difficult to anticipate, but expectations after the recent underperformance have compressed. And post-stock correction, implied valuations for retail business are 25 times FY26 estimated EBITDA, and valuations for retail business are now below historical levels, and it's below peer retailers as well. Morgan Stanley says refining margins are starting to recover after 2 tough quarters, and free cash flow engine should pick up pace as 0.6 million barrel per day of refining capacity shuts in 2025 globally. Also, net capacity addition should be half of the demand growth, and new energy is seeing demand improved outlook. So considering all these factors, both JP Morgan and Morgan Stanley have a positive outlook on Reliance Industries.
Sudarshan, thanks a lot for that. One of the key contributors to the Nifty upside today is Reliance Industries. Time for a short break. On the other side, Manisha Gupta joins in with Rajiv Bhutriacha, the Director General of the Automotive Tire Manufacturers Association. Stay tuned. Back on the other side.
Welcome back, and joining us on the show now is Rajiv Bhutriacha. He's DG at Automotive Tire Manufacturers Association. Mr. Bhutriacha, hi, thank you so much for joining us. I want to start with the prices in case of rubber, which are trading at a one-week highs right now. Of course, the strength in crude oil prices in some sense supports the markets, but it really is about the overall production in the major producing countries. So the numbers that we're looking at from Malaysia and Thailand are quite bullish for the prices. What's your sense on the global production, and how do you see the current prices?
Thank you, Manisha. I think globally, the projections for natural rubber are somewhat of a concern, especially in the major rubber producing countries, that's Thailand, Indonesia, and also Vietnam. And let's not forget, these three countries account for more than 50% of the total rubber production globally. And all these three countries are reporting or likely to report a negative growth in 2024 versus last year, with Thailand and Indonesia reporting double-digit negative growth, because of various factors like the typhoon and the abnormally heavy rains and floods that inflicted these two countries. So I think these are definitely going to mirror or reflect in terms of the overall rubber availability for the current year, as also the prices that you talked about.
Mr. Bhutriacha, what are the kind of prices that we're looking at in for the Indian markets? How has year 2024 been? What is the kind of demand that we're looking at, especially during this time? Because this is festivals, wedding. We do understand that the automotive, consumption also, or buying, purchasing as well, is slightly higher than other quarters.
Yes, in fact, the entire automotive ecosystem, including the tire industry, was very, kind of optimistic on the second half of the current fiscal because of the festive season and a general bounce back post elections and all that, with the increased spend for infra and other major projects. But I think a little bit of a, if I may say, if not a disappointment, but an aberration there, because in the auto eco space, we have seen that the replacement demand is yet to kind of bounce back, especially in the commercial segment, and also a little bit in the passenger car segment. Two-wheelers have done well, and tractors, of course, have done well because of overall, incomes and the rural incomes reflecting a positive trend. OEMs, which account for another major chunk of the demand for tires, have also been somewhat sluggish again into these two categories, which is the passenger car and the commercial vehicle. So I think the third quarter has been slightly, if I may say, somewhat sluggish or slower than what was expected. But we hope that fourth quarter would take care of, the growth projections. And hopefully, again, we will start the next fiscal on a more optimistic and positive note.
Mr. Budraja, what's the kind of production for rubber that we are seeing in India, and what's your sense of prices for the country?
We had seen in the month of August, the domestic rubber prices touched a record high, a 13-year high of almost close to 240 rupees. But they have settled since then to a more range-bound between 185, 190 in that range where it is prevailing now. So I think looking at the overall, the current global as well as domestic production consumption trends of rubber as well as the demand supply situation, it's likely to stay range bound and until we are out of the peak production season. Let's not forget September until February is the peak production season in India, and though availability in this period, this year in particular, has been a little on the tighter side. So one would hasten to add that if the demand was as bullish as was expected, then definitely it would have reflected on both the availability and the domestic pricing. But I think that sluggish demand coupled with the sort of being in the peak season has been somewhat of a better situation for the consuming sector.
Point taken.
All right, Mr. Budraja, thank you so much for sparing time and joining us with your thoughts. Manisha, thank you for joining in as well. With that, we call time on this edition of Halftime Report. The Nifty comfortably at the highest point of the day at 23,660. Business Lunch takes the action forward.